Another volatile day on stock markets in North America and around the world. Let's take a closer look at what's going on with JJ Kinahan, Chief Executive Officer of IG North America, an online trading platform. He's joining us now from Chicago. JJ, great to have you with us. We just took viewers what the market action is on the day. Most of our viewers will know, of course, that the major U.S. indices are down significantly from their peaks and so far this year. What do you see when you take a deeper look at this year's markets?
Well, as you said, they're down significantly. A lot of this has to do, obviously, with uncertainty. It does look like we are going to go through with some of the tariffs this week. And I think that actually, in some sense, Paul, it's actually going to be settling to the markets. And the reason I say that is it's been such a game of we're not going to, maybe we'll do some with this country, maybe we won't do some with this other country. And I think that getting certainty is what the markets always like. It may not be the program you like, or it may not be something that you're like, oh, I think it's a great idea. But at the end of the day, it's like, okay, I can trade around certainty. I can trade around when I know what the rules are. But when the rules are constantly shifting, that makes it incredibly difficult. And people's first reaction during those times is, I'm going to sell some things, especially probably people who have held things over the last couple of years. And if they have, in many cases, have done very well, particularly when you talk about Mag 7 stocks and tech stocks, which are areas of the market that are really suffering right now.
What does that tell us? In some recent commentary, you noted that stocks like Nvidia are now down more than 30%. Nvidia was really the flagship of the Mag 7s. We, over the past couple of years, have received all kinds of calls and emails about that stock from our viewers. Yeah. And the question is always the same: is this the right time to buy Nvidia?
Well, I'm sure, Paul, you could just do the entire rest of the day on Nvidia, quite honestly, and your viewers would love it. But that said, it's, a twofold question, really. The first one being Nvidia in terms of what it means for AI. And I think what's starting to happen more and more is, what is AI really going to do for us? And I think we all know that the possibilities are amazing, but the actual execution hasn't been quite as amazing so far. As one of my friends said, besides helping junior high schools cheat on tests, what is it really doing for us overall? And so I think that that's one of the questions that has to be answered more and more, with just the hundreds of millions of dollars that have been thrown into it. The real winner has been firms like Nvidia, the chip makers. So we have to see some ROI from other firms on AI overall in order for this to continue to be solid. That said, for your viewers who are asking, is the right time to buy? I think the real question back to the viewer has to be, what is your time frame? And what I mean by that, are you buying Nvidia because you think after these sell-offs we're nearing an area where we're going to have a quick bounce and it's a short-term play? Or is this a longer-term play where you're saying, okay, I have a few hundred shares to buy, I'm going to buy 100 here now and see what happens with the rest, and start to use downward movement as an opportunity rather than something to be afraid of? And I think that that's the question investors should always ask themselves first, is what is my end goal? And if, obviously a stock that's done very well, if you still continue to think that that's going to be what they're going to do, that's where you have to start. And I think people will be better served in their investments if they look at it that way.
A lot of question many investors will be asking themselves lately is this a time to be buying stocks or buying the indices? What do you think?
Well, what I would say is, for indices themselves, you're less prone to some individual news hurting you significantly. If you buy, like a ETF of the S&P 500, the spiders are the QQQs for the NASDAQ, et cetera, you're a lot less prone to Nvidia has some bad news and that's going to take down the entire thing. So again, little of it depends there, and a little of it depends, besides your risk tolerance, what you want and what the rest of your portfolio is going to look like. So I think that that's something that people have to consider overall. It's interesting when I look at some of the stocks that our clients are buying lately, Paul, over the last week, been two that really stand out to me in terms of being interesting. Number one being Target. as many people are looking at that and saying, okay, is this has the selling there been a little bit overdone, as that stock does continue to struggle a little bit. And so I think it's a bet on that the retail consumer will continue to buy, maybe not buy at the higher end store, but buy at a mid-level store like Target for things. And the other one that's really interesting to me is Uber. They just did the partnership with OpenTable, et cetera. So those are two stocks that over the last 5 trading days, our clients have certainly focused on in terms of buying.
Another one I believe that's on your list, your buy list, is Citigroup.
Yes. And Citigroup, being a stock that I think people are, although the interest rate environment continues to be one that is probably not favorable longer term for things like mortgages, et cetera. What it is favorable for is investments and people being able to borrow money to start businesses, et cetera, to reinvest in their business at a lot cheaper rate than they were just 2-3 months ago.
What do you think of Salesforce, the cloud-based software company? This one I see is also on your watch list. It has come down steeply, as have many tech stocks.
So that goes to the sell side, a stock that our clients have been selling. And I think Salesforce and their competitors, one of the big concerns as you look at what's going on in the U.S. right now in terms of DOGE and in terms of some of the spending that the tech firms have done through the government, I think that those expenses are being questioned. And so some of the firms that have a lot of exposure to government contracts are being looked at significantly. The other thing is, as companies have begun to lay off, et cetera, the use for some of those programs, et cetera, it's still there, but not to the level it was if you cut back on 10% of your workforce over the last 6 months, or you plan on cutting back on your workforce.
Investors are concerned about a slowing U.S. economy. It's too early yet for the key economic data points to be reflecting that. But over what period of time will you be, and what economic indicators will you be watching most closely to take the measure of the U.S. economy?
Yeah, well, employment always being a big one, and we have the employment report this Friday. That's one. And what I always want to look for in there, Paul, is not just the jobs number itself, which is, of course, important, but where are the jobs being created? And what I mean by that is, listen, many of us have, waited a table or attended a bar at some point in our life. But the hospitality industry is great, but that's not necessarily careers for most people. Where I really want to see things is things like construction, transportation, where you're creating longer term careers for people. And those are where you want to see the jobs coming from in terms of a healthy economy overall. So it's not just the jobs number itself, it's what's happening in the jobs. It's the average work week, is that at least staying the same and hopefully going up, and wages being paid, the average hourly earnings. So there's a few things within the jobs report itself that are very important. Then the other aspect that we've seen to move markets more than we have in the past is anything that's measuring consumer confidence. As you said, this has been an area people aren't as confident as they were. And so with that, we've started to see those surveys or those measurements really start to move the market to the downside more so than we've seen in the past. And again, so much of the economy is confidence in terms of going out and spending your money. Are people willing to go out and spend? Are people trying to save right now? And so I think we're at a very interesting crux in the economy right now, because it feels to me like we could go either way in terms of further spending or in terms of cutting back. Employment is a backward-looking number, but it's only backward-looking by a month, and certainly gives us a sense of what we can expect going forward.
JJ, always great to talk to you. Thanks a lot for this.